Hi there, I'm James and welcome to the Thursday technical update. I'm going to go through most of the markets that we're covering at the moment or trading, busy active trading in the next few minutes. So it's not going to be a long video, but I want to give you a midweek update. We'll cover things like natural gas, the NASDAQ, gold, silver, and even wheat, and perhaps the ZAR. And we'll talk a little bit about Bitcoin too. But it's short videos just to keep you abreast of what's going on ahead of the weekend. Tomorrow we start the weekend. Next week is the Christmas week, so it's going to get thin, markets get quiet. I've traded through many Christmases, about 30 of them I think, maybe 33. And it's a little bit different trading over this period. If you haven't done it before, you'll notice that the markets actually behave pretty well. You'd expect that thin markets and everyone being on holiday would make these markets sort of weird and out of control and a little bit technically sort of weird. But actually, the markets normally trade pretty well. So let's go through it very quickly, and I'll start from left to right once again. Dollar did move down a bit yesterday, made a new low, performing a lower high and a lower low, and actually getting down below the 20-period moving average. My signal that the dollar was going to move down was that red arrow over there. I wasn't trading the dollar index, of course, but I was looking at other pairs like the Australian dollar, getting long on there, long on the euro, and short on the dollar yen. Now, at the end of the week, we've got the Bank of Japan announcing their interest rate decision, expected to raise by 0.25%, 25 basis points. That'll have the effect of pushing the dollar yen down, but it may in fact just be temporary. I don't know. What we don't want is a massive carry trade sell-off like we've had several times quite recently in the past. And every time we've had these carry trade unwinds, and you can look at my previous videos to understand a little bit about the carry trade and what it's about. If you don't want to do that, go and Google it. It's a pretty simple concept. So whenever these carry trade sell-offs occur, we saw big moves down in the stock markets, particularly in the US. We don't want to see that. So an orderly move down would be great. And frankly, at this stage, if we just get to the bottom of the channel, I'll take my profit and get out. I'm actually tired of trading this pair. I've been trading it for a long time, 30 years. You'd think I would have divorced myself from it, but no, but I haven't. There was the dollar index weekly chart, actually, that I was looking at earlier, just a few seconds ago, and actually we did move up on the day. So even though the weekly chart is angling down, the day chart had a little bit of a tick up yesterday. But just into the 100-period moving average, as you can see there, and holding beneath that resistance level, there's quite a lot of resistance at these black lines and the moving average clusters above. So it looks like the dollar's moving down probably for the next number of days or even weeks. So we'll continue to look for that. I'm going to try and buy probably right now, when I finish this video, get long on the Aussie. Pull back to this falling wedge breakout zone. We're above all the moving averages. There's the 200, the purple one, and the shorter term ones here. We reached the top Bollinger Band after breakout. Necessarily we pulled back, but just to the 20-period moving average and the breakout level in this falling wedge. I think we can get to the mid 0.7s on the Aussie. That's where it likes to go. We talked about this in the live stream for members yesterday. Now on stocks, I've just added a new long position onto the S&P right down here. Hopefully we'll get a tweezer bottom today. Not looking great. 1, 2, 3, 4 days down. Maybe we'll get a fifth day. I don't know. This is not a big position right now. I'm still bullish. As long as we hold above that double bottom, I will be looking to buy the S&P. It's very, very simple for me. That's the line in the sand. Check it out on your charts. If you're trading the futures, compare that to the futures at the current price. On the NASDAQ, similar sort of story. I haven't added any more, but we did get long a couple of days ago at the 100-period moving average and the 618 fib. So a great pullback to the golden pocket. We barely held there yesterday, so that's 3 days in a row holding that level. Reminds me a bit of Bitcoin, actually, over here. Now 4 days in a row holding this level. So I'm quite hopeful that this will bounce out today, but we may have to have a fifth day down. Similar to the S&P, if we break down below that red line, actually, do I have a red line? No, I don't. Let's put one in. If we break down below that flat bottom, well, it's not a flat bottom. On the S&P, it's a double bottom. Here, it's, this bottom got a little bit lower than the previous one. But that's my line in the sand, and that's 23,823. Is that correct? Yes, something like that. So, and as long as we're above those levels on the NASDAQ and the S&P, I'll be looking to get long. We added a new fresh tranche on the S&P at the bottom this morning. You still have a chance if you think this is a good idea. I'm also long on Circle. Dropped off yesterday, one of my favorites. This is a good one. And if you do some research on Circle, you might agree with me that we could get in right at the bottom floor. I'm long on MSTR. Everything coming off yesterday, actually overall, the markets, including Bitcoin, massive move down, Ethereum, XRP, Sol. But as I said, holding that level. I'm not going to talk too much about Bitcoin because I'm going to let Crypto Paul deal with that this afternoon in his live stream. But just to say, we've got a potentially a quadruple bottom here at this very key level. that I've kept my eye on for a long time. I'm slightly hedged on this, but as soon as we break above about, I think, if we can get above this 20-period moving average and hold above that level, that will be the next stage. And then, of course, this big level here at about 94.5. And then, of course, this massive level here at 94.5, well back into this potential bear flag, which I don't think, personally, I'm sort of 50-50 on it. Maybe it'll play out, maybe it won't. I don't know. Anyway, rather attend the live stream with the expert on crypto Paul later. But just to say, I've got longs on, not on leverage. None of this is on leverage, except for some of these Bitcoin plays. I'm managing that very carefully. Now, metals, I've literally just hedged my gold and my silver plays. I've locked in profit on the silver longs from the green arrow. We got long at $50 on silver. And I'm now fully hedged, finally, at 66.5. Pretty good trade, right? I've done that because I think we might go to 74, but I think this is really, really getting overextended right now. And although I think it might go up, I've hedged it. That means I've still got my longs on, right? I'll take profit if we go higher and then add to the shorts when we turn around. So that one's locked in, $15 on silver. When do you get that? Normally that was the sort of maximum price of silver. And then at the same time, I've also hedged my gold trade, and because I don't know what's going to happen next. If this one falls off, gold should move down. But if they both carry on and blow out exponentially, I don't want to be holding this gold trade any further. But once again, when we get to the top, if we identify it accurately, of course, I'll try and reverse these, take profits on the longs because they're both hedged now. So we've got longs and shorts, and then add some more shorts if I feel that it looks good. Same thing on copper. So I'm hedged now on silver, copper, and gold, having locked in profit. All of these, we've made profits on gold up until this moment. And the fact that we got through the 78.6% Fibonacci here is a concern. And so I was hoping we'd turn around there where I first started selling at the 786 last chance fib. But we got back up to not quite, almost the previous all-time high, triple top. As long as we're below there, I'm still relatively happy to hold this hedge with the idea that gold could move down, break the primary short-term trend line, 20-period moving average, 50-period. This is the day chart, and then eventually get on the move down to the 100 and the 200 down here, this big rising red trend line, and potentially even the rising green trend line all the way down here, or the triangle breakout, and that's at 3,500. So there could be quite some downside for gold, but at the same time, we could just keep on moving higher. And it's been difficult to trade because we haven't had a good look at the COT reports, which are only starting to dribble out now. We'll get more clarity on where the market is positioned next week, I think. Right, let's go on to natural gas and WTI oil, uranium, lithium. I'm long on uranium, long on lithium. I haven't added any new positions on uranium. We got long there initially, initial long position at around 20. We went all the way up to 60. We got a good chunk of that. But now, on the retrace after such a big sort of rally, where are we going to hold? There's the 200-period moving average on the day chart, point of control. And it looks like we're going to come back down there to that swing low. And I'll add some more uranium. It's also a nice cluster zone here. Potentially, we could get all the way back down to the breakout yellow channel, all the way down to 33. But that's probably unlikely. And let's see what happens at 40 or 39. That's uranium. But let's look at natural gas. Now, I'm trading the futures here at FXCM. And we took profit on the long from the bottom. I posted all this up on X. So if you didn't manage to see it on X, you can hear it here now. But this was 12 or 15 hours ago. You could have got the information a long time ago. Go and follow me on X. I post there all day long. So we got long right at the bottom. I took profit on those longs, 10 cents right up here. And I also started unhedging some of the hedge position that we've got up here. So we've now reduced down to from 50% hedged down to 20% hedged. So, almost out of the hedge right now, looking for this to bounce right here. Remember yesterday I said, look for a breakout, a big white candle on the 4-hour chart. We got that. Massive white candle breaking through the 20-period moving average here on the day chart after hesitating, this is the 4-hour chart, for a few hours, almost a day. We got long at the bottom after that candle. We were lucky to get at the bottom, but it did form a reversal candle eventually. The big white breakout candle through the 20 made me unhedge a little bit more. And then I said to my private group, I would unhedge further on the retest, on the dip back down to the breakout level. That's where we are right now. So I've unhedged a further 20%. We're down to 20%. That means I might consider adding a long if we bounce out of here just now in the next few hours within this candle. And if we get a reversal here and a clear bounce off this support level, maybe down to the 20, we might have to get back down to $4. It's a big round number to break out from 2. And then if we do get the bounce, I'll be potentially, not promising, but potentially adding a new long position to my currently 40% with 20% hedged. So that's natural gas. Target, of course, we must check out the target. And it's really back up to the underside of the breakout trend line where we did get hedge. So that's the hedge I'm trying to unwind. It's also an order block. And also, this big downward 4-hour candle right here, let me put an arrow there, is not a candle, it's a gap. Remember, we talked about this. And if you look at this on the futures chart, I'll show you shortly. So that's a gap, it's not a candle, and it means that it's unresolved. It needs to be, potentially needs to be closed. And if we look at this on the futures chart, I'll show you right now, there's the gap, right? So let's look at this on the 4-hour, and you'll see the gap right there on the Henry Hub futures. Now that needs to be potentially retested. It means we could go a long way up, right back up to that level. And if we look at this on the futures that I'm trading at FXCM, the way I've charted it, you can see where we're aiming. So, and big volume zone there. We've got to get through these points of control, and there's a lot of volume down below us, so we might have to retest. I don't think so. I hope not. We'll hedge if we break down through that last green arrow at the bottom. Right now, looking to bounce out of here. I've unhedged a bit, maybe going to get some more longs on here, and the target will be back at $5, potentially even to close this little gap at the top. So that's natural gas. WTI oil, I was saying to the private group and the live stream we did yesterday for members, come and join us. It's only $1 or $2, and you get the midweek private videos here on YouTube. It's literally $1 or $2, and we've actually reduced the price, so come and join us. We spoke about this yesterday. The fact that there's a blockade on Venezuelan oil tankers spooked the market. Now, we took profit on our shorts. There was our last short, 2 shorts. We got out literally at the bottom at 55, just because it was the bottom. There's a double bottom over there, and we got out taking profit and protecting what we gained. And so, I didn't know it was going to bounce out of there. I thought it might, but it did. When we started moving up, there was no reason to hold the hedge, so I unhedged. I would have held it if we moved down to try and take profit on the downside. No reason to hold the hedge, so I took the full profit, and then I sold at the earliest opportunity back at the top of this big white candle yesterday, because this is just a blip. We've been trading the short since 2022 at about $125 or something, and we've barely been long. We got long here at the double bottom. I think that was the only occasion. And so I think this is going to move down. I've got a path drawn in already. I think we'll get down to 50, and I think we might get down to 48 and then bounce out of there all the way back into this big lump of volume that we've been trading in for many years now. So that's my plan on WTI oil, down to 50, maybe 48, and a big bounce where I'll get long for another $10 or $20 back up to the upside. That's oil. And then another couple of things here on softs and grains just to finish off. The only real position of interest, I'm long on sugar, long on cotton, long on corn, and now long on lithium. We talked about it on the energies page, but now long on wheat again. Again, we spoke about this in the live stream yesterday for members. Come and join. It's a couple of bucks on YouTube here. Let's just click the join button. It's pretty simple. We have a big breakout of this falling wedge. We got long at the bottom there, at the triple bottom, and we got out at the top there as it approached resistance. And I thought maybe, we wouldn't get back into this trade, but we've come all the way back down to the breakout level. In other words, the falling wedge top. And we got long there on instinct on the touch of that falling wedge. Now, on the long-term chart, this is what I think we could end up with. I thought we would get lower, actually, and form a sort of a squiggle bottom down here, but we didn't. And so we got long earlier rather than, lower. But it was good, and we got out at the top. Now we're long again, almost back where we got in initially on the first place. And if this does get going, I think we've got a good chance of a nice, sharp, short squeeze, as it's already begun out of this falling wedge. Folks, I think that's it. Let's have a quick look at this chart. Yeah, TLT, we got long on TLT at the moving average. It's fallen through yet again. Can't stand the way this has been trading. 10-year yield moved up above resistance again. So not good overall, probably for the stock market and for bonds in general. And then Bitcoin dominance, Paul will talk about this later on in the live stream. Make sure to be here this afternoon. There's a lot of stuff going on in the crypto world, but Bitcoin dominance zooming up as we see Bitcoin holding support, whereas the alts, the major alts are not holding support. And we talked about this one yesterday, Ethereum's bear flag. You can't call Bitcoin a bear flag without calling Ethereum the same. And this is even neater. Touch at the bottom, top there, revisited from underside, 3 beautiful touches at the bottom until today or yesterday, and then the breakthrough, bear flag. So I don't know, Bitcoin will inform all of these, but right now it looks like they're all moving down. Join Paul later. He'll give you some good clues and hints on the way he's trading these. Folks, have a wonderful day. We're approaching the weekend, and next week is Christmas week. So it's all end of the year stuff, and these markets will get choppy, messy, and difficult to trade. Not only because it's the end of the year, markets get thin, and as I said earlier in the video, that doesn't really affect the markets that much. In my experience, most of the time, markets trade really well over the Christmas period and adhere to technical patterns. Maybe it's because the mavericks aren't around, I don't know. But there is also potential for this sort of very difficult year as we end for explosive moves, trapped liquidity moving around, because we've had lots of trapped liquidity this year in different pockets, in different markets. And maybe some of that needs to be released by a year end. You never know what's lurking under the surface. Take care, everyone. I'll speak to you soon.
You wanna trade like a king, you better act like a monk. Let the chart do the talking and keep your rules tight. Rule number 1, trade what you see, not what you feel or who's on TV. No gut check gamble, no lucky spin. I need structure, baby, before I jump in. See it, don't feel it. Rule number 2, have a plan in place. Zone locked in, set up with grace. If I can't explain it, I don't press go. It's a no trade day if the story says no. Reasons, zone, plan.